Maybe you guys have heard me or my partner Denny talk about some of our dabblings in land investing over the years and how we have gone out and invested in some land parcels. And one of the things that we loved about land investing is the return to risk ratio on some of these strategies for investing in land. You can potentially earn higher returns with lower risk than more typical multifamily or residential or commercial real estate investments. So, to help break down the risk to return ratio for some of these land investments, we've brought in JD Hill and Aaron Shumaker. They are the founders of LandX, which is a land investing company. They have nearly $50 million in assets under management. And this is one of the fun things about running an investment club for passive real estate investors is we get to talk to endlessly interesting and fascinating real estate experts from every niche in the spectrum. And then we get to invest in those together every month in our investment club. So without further ado, JD, Aaron, I want to hear more about what is the risk return ratio in some of these land investing strategies that you guys use.
I'm gonna let Aaron take this one because he's got a background from Goldman Sachs. I think he can talk to this a little bit cleaner than I can.
There we go.
Uh, well, it so when we think about risk and return, the way we try and think about it is it needs to be a high enough ROI to make it worth our time, and it needs to be something that I'm completely happy putting my mom's money, my grandparents were still around, my grandparents' money, and in any way, shape, or form, we're going to be very comfortable that we're going to get our principal back. So we're looking for strategies where we can deploy money and get the principal back in a relatively short period of time. And typically, when we're investing in these land subdivide projects, that's what we will typically do. We'll take a huge parcel, call it 1,000 acres. We'll chop them up into 10 acres or 1 acre parcels, and we're able to force appreciation when we're doing that. We're trying to reduce risk in a couple of ways. The first is we're always trying to buy below a dollar. If you can buy a dollar for 50 cents, you're a hero. If you can buy it for 30 cents, you're a unicorn. If you can buy it for 70 or 80 cents, and you're subdividing it and you've got a lot of value to add to it, you're doing pretty well. So the first way is we look to buy below market value. The second is we're looking for huge arbitrage spreads. So if this land is worth $1,000 an acre or $10,000 an acre at a 1,000 acre parcel, we're looking for plays where we can force appreciation to, two, even 3x that return in a short period of time. So, we look for those margins because, I come back to safety first. I always want to make sure that, the safety of that hard-earned money is always going to be protected. And to do that, we're looking for really large spreads, and that ultimately works out really well from a return standpoint. But if something goes wrong, we want multiple things to be able to go wrong, and then we're still able to deliver the return that we're expecting and that we're promising to our investors. So those are a couple of the ways that we think about risk, and we're just trying to find these projects where it's, we can sleep extremely well at night because it's, we're investing in hard assets, real estate, land. We're investing in areas where, we know we can move the land in a relatively short period of time if something goes wrong. And we're trying to get 6 or 7 different ways that we can exit a project if ultimately, not everything goes according to plan.
Yeah, no, that
JD,
makes. Oh, go ahead.
yeah, no, go ahead. No, go ahead.
I was just going to say, I love what you said about looking for deals that you would be comfortable putting your mother's money into. I think that's huge, and it's a recurring theme in our co-investing club is looking for investments that offer asymmetric returns. And one of the things that I love about land, and that when we look at land investing deals that we like about that low risk to high return ratio is that you don't have construction risk, you don't have property management risk, you don't have tenant default risk, you don't have residential regulation risk, like landlord tenant regulation risk. There's usually minimal leverage with land investments, unlike some of those high LTV, highly leveraged multifamily deals or other commercial real estate deals. So all of those, make me feel great about putting my money in land funds or land deals. You mentioned something that I wanted to just dig into a little bit more. Two things. One, you mentioned getting your principal back within a short period. So I'm curious to hear what kind of turnaround time you guys are seeing on these land investments that you're doing. And I also wanted to dig into that risk. You said that your primary strategy is subdividing large lots into small lots. What is the risk of the local municipality not approving that subdivision for a land parcel that you buy? So I'm just curious to hear a little bit more about those two questions.
Yeah, so I'll answer maybe one, and Aaron, I'll volley back to you. What's interesting about our strategy, if you think about whether it's flipping houses or multifamily or any of those other particular strategies, you make money on the exit, right? So you have to sell that one asset in order to make money. With what we're doing, we get the ability to sell multiple different parcels to generate cash flow, right? So we're getting principal pay down back very, very quickly. So the moment that we get parcels on the market, we're starting to get sales. So we're not waiting for one big sale at the end in order to then get all the capital back to then pay down the debt and then pay investors back. One of our projects that we did, I think we're at like 40+% IRRs, and we sold out completely in 6 months of one of these particular projects.
And we still have room to go. So we're like 3/4 of the way sold through that one. So it's still going.
And so because we're able to take one item and turn it into multiple items, I think from a risk standpoint, that really allows us to diversify our risk because we're constantly able to make sales instead of just holding on to this one asset to have to sell, especially when you consider what's happened with interest rates as they've gone up. Multifamily and commercial has gotten crushed, right? Because they underwrote those deals with NOI based on a particular interest rate.
Right.
Well, when that interest rate went up, that NOI went away. And so now they're having to hold these assets and do capital calls. We don't have to do that, right? That's not something that we're necessarily challenged by. Interest rates affect everyone, don't get me wrong, but not in the same way that it certainly affects, something that is like multifamily or commercial or those types of things.
And
So
your other
what is the
question,
average turnaround time for you selling these lots?
it can depend on the project, but our goal is to return capital in somewhere between 8 and 12 months. So you've got your principal back in 8 to 12 months, and then the project completes, around 12 to 18 months, sometimes as long as 24. But our goal is to really return, let's see that money back in a year. And we're really, 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 really big fans of velocity of money and velocity of capital. I think your other question was around, what are the risks around approvals from the municipalities? There can be many, or there can be few. And our goal is to, by the time our earnest money is going hard on one of these contracts, we want to have absolute certainty that what we want to do is either doable, or there's a plan B that's doable, that's, meets acceptable risk return criteria with a very high likelihood of I don't think we've done a project yet where we haven't had definitive approval at the time by the time we purchase the contract, we know we're able to do exactly what we need to do. And there's lots of rules and regulations. So you tend to want to work in similar areas to where you're working, or similar types of projects. So the rules and regulations you're working with. But our goal from a risk reduction standpoint is, let's not have any from a jurisdictional approval. Let's make sure we've procured, or we have, a written document that says we will grant you whatever you're going to ask for by the time we are sending money in. So that's how we mitigate and essentially eliminate that risk.
Yeah, no, that makes perfect sense. I love that you guys are confirming the subdivision approval before you even buy the parcels. That, like you said, that eliminates so much of that risk. And JD, you mentioned something that I think not enough real estate investors talk about, and that's velocity of money and being able to turn over your investments very quickly. Keep redeploying the same money, because the faster that you can, turn those capital projects and those investments over, the more frequently you can compound your returns, right? You can compound more frequently. So
money
love all
loves
of that.
speed. Yeah.
Yeah, exactly. So JD and Aaron, in 30 seconds or less, how do you help people, and how can people connect with you if they want to take you up on that help?
Sure. So you've heard a little bit about how we try and be great stewards of money, and how we try and look at safety first and risk mitigate. So that's how we approach things: is safety first, risk mitigate first. So we help people build passive income streams, and we've got two ways to do it. There's a debt fund we operate out of, an equity fund we operate out of. The debt fund provides regular quarterly cash flow, paying anywhere from 10 to 12%. The equity fund, we do a lot of these subdivide projects in. We're targeting 25 to 30% IRRs in about 12 to 24 months. And to learn more about us and our projects, you can visit us at landx.land. That's land, the letter X, and then .land, no .com or anything like that. Just landx.land. You can put your info in there and have a chat or browse around and learn more about the wonderful, very exciting world of land.
You know, I've heard land referred to as the ultimate boring, unsexy investment in all the best ways, right? I mean,
Yes.
you know, if I want exciting, I'll go to the casino and, you know, put it all on the roulette wheel. But in my investments, you know, I want it to be safe, boring, and low risk. So anyway, Aaron, JD, thank you guys so much for coming on today. And listeners, if you guys enjoy these quick, focused conversations that we have with real estate experts, please rate, review the show. Makes a world of difference to us. And on that note, we will catch you next time. Wondering how private equity real estate investing works? We get it. A lot of investors are put off by phrases like private equity or real estate syndication, but these completely passive investments are actually a lot easier than buying properties directly, buying properties yourself in your own name. So we offer a free 40-minute class called Hack the Rich, 7 Secrets We've Learned from Private Equity Real Estate. There's not even a sales pitch at the end. We'll show you how to invest in these on your own without any help from us. So go to sparkrental.com/hack to take the free class. And we can't wait to chat about your questions.